Well, tomorrow is D-Day for the decision on local interest rates. Market observers largely expect the Reserve Bank to keep rates unchanged, with the repo rate steady at 8.25%. But ultimately, what does the inflation trajectory look like? And could we see economic growth improve more than previously expected? Well, to discuss these matters, I'm joined by Elize Kruger. She's an independent economist. Thanks very much, Elize, for joining us. So what's your sense around the direction that inflation has been taking, and could we potentially get a rate cut tomorrow, or is it too soon?
Nompo, I do think it's too soon for a rate cut tomorrow, given the fact that we had a unanimous decision at the previous meeting of a no change in rates. And, we typically know the Reserve Bank members tend to first indicate their preference for the next move in a certain meeting, and then only happen to get that move in the next meeting. So I do think there might be some indications in the statement tomorrow, and also perhaps in the voting, that a potential cut could be on the cards maybe in the September meeting. But talking about the inflation trajectory, yes, indeed, we should start to see headline inflation moderating and moving below 5% in September this year, and also stay below 5%, for the remainder of the forecast period, at least the fourth quarter this year, on average of about 4.5%, and likewise such an average for next year. So a forward-looking Reserve Bank should start to move on interest rates.
Well, we wait to see. So the IMF, as we mentioned just before, has kept South Africa's growth outlook unchanged at 0.9%. But that's despite massive improvements in the electricity supply situation and a forecast that in actual fact we're going to get more capacity on stream sooner rather than later. Given that, what's your view on what growth may look like for the balance of this year?
Yes, my view is an average growth of 1%, so just marginally above the IMF's view. And, I think it's a matter of how the quarters are playing out, So in terms of the quarterly assumptions, on my forecast, it's like a 0.4% quarterly growth quarter 2 and 0.6 in the next 2 quarters. So that's quite a bit better than the first quarter's contraction of 0.1. But still, on an annual basis, that will only give you about a 1%. So let me say, I think there's upside to the current forecast of myself and of the IMF. But if you, for instance, look at the second quarter, where we had a full quarter of no load shedding, we still had our manufacturing and also our mining sectors, struggling, not growing as fast and as vibrant we thought it would be without load shedding. So I think it really shows that there are many more obstacles and challenges in the economy that needs to be addressed. And also, I think we had a matter of a lot of the investors sitting on their hands pre-election, waiting for more clarity on what will be the outcome. And hopefully, from that point of view, the second half could be better.
Yeah. So you've touched on a couple of really good points, which is the issue of investors sitting on their hands. And obviously, it's important that we have a government that is seen to be facilitating or making a conducive environment for economic activity. So with those points, tomorrow, of course, is the State of the Nation address. And there has been a level of confidence that the new GNU may be able to expedite some of the critical policy issues that need to be addressed for the country to get growth going in a meaningful way again. What are you hoping the president is going to speak to when it comes to the issues of policy? Are you expecting any change? Is it going to be, the same old? What do you expect?
Yes, I would like to believe that we can hear a few new noises tomorrow compared to the previous couple of years. But I do think
Hi, Elize. Elize, I'm so sorry to interject, but we are going to leave it there. That was Elize Kruger.